when we talk about the moves in the pre-market right now, we're seeing the futures hit their lows of the morning. Also, bond yields benchmark above 4.5%, long bond above 5%.
Frank, I think investors are going to welcome this sort of short-term pullback. This move down over the last 30 days or so, advance back up, has been so quick. It's been so technically driven, but a lot of investors really have been whipsawed and haven't been able to really participate in this. So I think they're going to be welcoming any sort of pullback in this tape.
All right, your word of the day is FOMO. What are people worried about missing out on?
Well, the word is FOMO because a lot of investors just haven't participated. We've had this 20% advance off of the lows. They haven't believed it. We've gapped above the 20-period moving average, the 50-day moving average, and the 200-day moving average. And they still look at this market and say, how do I get on board with this? When, again, the market's going up. It's creating a lot of challenges for investors because when you look at the positioning data, they're just not there. They're not participating in this advance the way they should be.
So I've heard other people say that, but then why did we see a decline yesterday? Why did we see the S&P snap that 6-day win streak if people are trying to catch up to the rally?
Well, I think, again, we've had a very sharp move in this tape. We're running into some overhead resistance levels technically. And so you're seeing a little bit of sort of people backing off. The market's got a little bit short-term overbought. But again, this is overbought condition is going to be an opportunity. Think about what happened on Monday when the U.S. debt got downgraded. Everybody's like, oh, we're going to see a big sell-off in the equity market. Wasn't the case. I think investors looked at that particular as an opportunity, not as a reason to be selling stocks.
In all fairness, we saw a sell-off in the morning and then we rebounded.
That is correct.
I want to get to some of the stocks that you're highlighting. One of them is Uber. So Uber, obviously in the news after Elon Musk said no plans to buy it. They actually Tesla plans to roll out its own app. Does that worry you about the future of Uber?
No, I think this whole ride-sharing space is in good shape. I look at the chart. We're starting to break out the new highs on the chart, and that's a very constructive setup. The pattern that we're seeing there is being replicated in a lot of other stocks, too, whether it's Uber or some of the other ride-sharing companies. That's the future.
All right. You also like Schwab in the financials. Give us the elevator pitch on that one. Is it disruption in the market leading to more trading volume?
I think it's more individual investors coming into the market, getting more sophisticated and managing a lot of their financials themselves. And when I go back and I just look at Schwab, look at the chart, look at the setup, it's in great shape. Also keep in mind that the yield curve has also been steepening and normalized, which should also be a positive for financials across the board, and Schwab is going to benefit from that too.